Good morning. Welcome to Stock Market Today. It's Thursday, November 21st, 2019, and I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Gives you daily stock ideas to consider in your inbox every trading day before the market opens. So U.S. equities were lower in Wednesday's trading, but closed off the worst levels of the day. Energy led while materials lagged. Treasuries were stronger with the curve flattening. Dollar was stronger against the yen and the euro. Gold finished a little changed on the day. WTI crude was up 3%, driving that outperformance in energy after a smaller than expected U.S. inventory build. At the main level, trade comments continue to drive short-term trading with reports that a phase one deal may not be completed this year. But as we get to the desk this morning, futures are up about 10 basis points to get us started. Trading near the best levels of the day. There's some M&A activity in the market in the online brokerage space as reports that Schwab is in talks to acquire Ameritrade. Treasuries are weaker across the curve. The dollar is stronger against the yen, but weaker against the euro. Gold down 50 basis points, and WTI crude is adding on, up another 60 basis points to get us going on a Thursday morning. As we look at the market here, stocks pull back. As we said, trade headlines driving near-term activity, but as you can see from that candle pattern there, we did close well off the worst levels of the day. Support continues to be, or key support rather, continues to be, in my opinion, at around the 200-day moving average at 29.15. In the near term, should the pullback gain a little momentum to the downside, we'd be looking at 30.30 to 30.50 as the initial support zone, and then about 29.50, those gaps throughout the consolidation. I've taken the line off the chart. But they do remain in place. RSI is overbought, maybe rounding out of the overbought condition, and Chaikin money flow continues to move higher. It is bullish. So we have bullish momentum, though near-term overbought. We have bullish money flow coinciding with the market holding above the breakout level at the 30.30, 30.50 mark, and in an uptrend above the rising 200-day moving average. So not a ton has changed from a trend perspective with confirmation from our indicators. What are we writing about in the note today? Well, trade comments continue to drive near-term trading. It really is in both directions. So we get comments that investors view the deal might not be going as well as planned. The market tends to sell off, and then we get some counterpoints, and the market tends to rally. Breadth metrics do remain constructive, and global stocks are holding the breakout level in absolute terms. We'll take a look at what that means. And one of the interesting notes today in the market, especially in light of that M&A activity around the online brokerage firms, the brokers and exchanges, the ETF IAI is breaking to new highs. And as I said, futures point to a flat to slightly higher open here today. Let's look at the power bars for the major indices. Dow was down 40 basis points yesterday. All the major markets down on the day. Still 2-to-1 bears to bulls on the power bar ratio for the Dow Jones Industrial Average. S&P 500 down a like amount, 128 bulls to 94 bears there. NASDAQ slight underperformer on the day. 34 to 21 bulls to bears for the NASDAQ. And small cap stocks decline in line with the S&P 500. 656 to 311, so still better than 2-to-1 bulls to bears for the small caps. Bonds rallied, sending yields lower, and energy was up over 1% on the day with that 3% pop in crude oil. But I will note, power bar ratio and the fundamentals just in general around energy remain weak. 18 bearish stocks for 2 bullish stocks. According to the Chaikin power bar, small cap stocks and large cap stocks are bullish. The major indexes across the board are mixed. It's our stock of the day now. Actually touched on it yesterday when we were looking at the regional bank as an industry group. It's East West Bancorp. EWBC has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong earnings performance, very positive expert activity, and some strong price volume activity of late. What I see here is a very bullish rating after we roll up the 20 factors. Strong trend above the trend line, strong industry group. We've been talking about the banks. However, market and model not in agreement here. Very bullish rating met with a stock that continues to underperform the market. Now, we've seen the relative weakness diminish over the past few months, and it could be the signs of a personality change, but we're not quite there yet. Stock is oversold. Let's call money flow mixed to slightly bullish. I think it's an interesting name to add to a bullish watch list and continue to monitor it. However, I do think if you want exposure to the banks and the areas of the financials that are now outperforming. There are probably some better names out there. Not going to totally disregard East West Bancorp at this point. Going to add it to a bullish watch list and continue to watch for an improvement in relative strength. Should we get that improvement in relative strength, I think the stage is set for a better opportunity on the long side in that name. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. Healthcare at the top of the list, second biggest weight in the S&P 500. A little bit of choppy activity in and around interest rates after a big backup, a little bit of a consolidation helping the real estate and utility sectors of the market of late. Comms, staples, and tech are middle of the road. Financials are still higher over the past couple of or 5 trading days. The laggards, or the groups that are down over the past week of trading: industrials, discretionary, energy, and materials. Remember what we've been talking about here with the energy group. Fundamentals there are just still not that compelling. And materials look like they are fading after a near-term rally with some of the beaten down, value-driven and cyclical-driven areas of the market. So that's an event that we're going to continue to watch closely. Now, our industry in focus today, retail services, which over the past 6 months has been an underperformer, down 4.5%. Power bar ratio, which measures future potential, is weak technically, right? Because 20 bears to 19 bulls. This is a group that we've been highlighting, talking about. Remember yesterday I gave you my mea culpa. I was a little bit early in talking about retail, but that doesn't change the fact that the rating did turn bullish. Group is currently ranked number 16 of 21 subsectors. It's moved down 5 slots over the past week. So really what I think happens here is there's a bifurcation within the retail services space, and stock selection becomes really important. You want to avoid the very bearish names. Names like Ollie's Bargain Outlet, OLLI, Monroe, MNRO, and JWN, JW Nordstrom. We'll talk a little bit about that one later in the show, but those are all very bearish stocks, names that we want to avoid. But again, let's look at what we were talking about. Here's XRT, the retail ETF. Has a bullish rating, and it's the first time in a year, over a year really, that the rating for XRT has turned bullish. So that's kind of what caught my attention over the weekend, and we started talking about it in our notes and on this show. And no sooner did we start talking about it, but we got some dicey retail earnings reports have put the group under pressure. Now we're heading towards an oversold condition, but money flow remains bullish. Fund has a bullish rating, as I said, and is above a rising long-term trend line. So this pullback could potentially present an opportunity for ETF investors out there. For those looking to drill down on the stocks, you have 19 names with bullish or very bullish ratings that you could take a look at. But again, coinciding with that bullish rating for the first time in over 12 months, we actually have a fund that's outperforming for the first time. Notice the relative strength has been weak throughout the year and is now perking up. So I do think it's still an interesting area of the market, maybe a little bit early, still getting some retail earnings in. Macy's trading lower here this morning following their earnings announcement, but I continue to focus on the retail area of the market. And you're going to see a lot of retail names on both sides of the leaderboard here. Yesterday's S&P 500 movers and shakers are gainers and losers. Target beat on earnings and their comps. Stock was higher by 14% on the day. This is where that stock selection portion really does become important. Schlumberger scored an upgrade to send that stock higher by 5.33% on the day. Hologix announced the sale of one of their businesses, and that sent the stock higher by 4.3% on the trading day. Lowe's, another part of that retail group. Remember, Home Depot was really weak the previous day, got hit hard following their earnings announcement. Lowe's comes out the next day and talks about things being a little bit better. And really, what got the stock going here for Lowe's was the fact that they raised their guidance, and that was enough to send the stock higher by nearly 4% on the day. ConocoPhillips up 3.83%. With oil and energy. They also had an analyst day the previous day, so investors kind of digesting what they heard at the analyst day, and then the stock gets a little bit of a help from that 3% pop in oil and the rally in the energy complex. Now the loser side of the board, very much consumer discretionary focus. L Brands, some pressure and commentary that are leading some to believe that Les Wexner, the CEO of the company, could be seeing some pressure to step down. What I will note, though, is that L Brands reported last night after the close, and the stock was trading higher on that announcement. JW Nordstrom under pressure with the other department store retailers following earnings reports. They do a report tonight. Wouldn't be surprised to see some pressure on the name given the Macy's report and the fact that Macy's is trading down about 6% here in the pre-market. Harley Davidson, no real company-specific news, maybe getting hit with some of that commentary in and around trade. Capri down 3.64%, nothing company-specific to drive the trading in Capri on the day. And American Airlines down 3.6%. I didn't see anything company-specific there, but one area that could be impacting the airlines, at least in the near term, is when we tend to see some big spikes in oil. People start to extrapolate what that could mean for fuel prices for the airline companies. American Airline, nothing company specific, but the stock down 3.6% on the day as crude oil rallied. Let's dig into the charts now. It's Thursday. It's breath day. And breath is kind of interesting to me because it does remain constructive from a trend perspective, right? If we look at the percentage of stocks in the S&P 500 currently trading above their 200-day moving averages, it's still healthy at 73%. We view anything above 60 as a sign that a healthy majority of stocks are in long-term uptrends. We start to get worried when this metric breaks below and stays below the 50% mark as it did last fall, which led to that big decline in the S&P 500. So the breadth metrics here from a long-term trend perspective remain constructive. Intermediate term, same can be said. We're at 69%, slight downtick over the past week, but still above 60, still above the level that marks a healthy majority of stocks being in intermediate term uptrends. So something we're continuing to keep an eye on. The advanced decline line continuing to move higher here. Just a series of higher highs. So breadth does remain constructive. The one real slight concern that I have, if you will, is the fact that whether we look at percentage of stocks above their 200-day moving average, percentage of stocks above their 50-day moving average, and for those of you who get my morning note, percentage of stocks above their 20-day moving averages have not made higher highs with the market. We've been talking about that for a couple of weeks. It is a negative divergence in breadth that we are keeping an eye on. We would love to see new highs in the market being met with new highs in these breadth indicators. So what does that mean? It means it's just a signal to sit up and take notice. Just kind of be aware that while breadth remains constructive, currently not confirming the price strength that we're seeing in the index. Is that a signal that you go out and sell everything? Absolutely not. You continue to watch price, but you continue to watch those support levels that we've been highlighting really closely, because if breadth continues to deteriorate or does start to deteriorate from here, that would increase the odds that those support levels might give way. That's kind of how I look at these divergences in breadth that are playing out in the marketplace currently. Looking at things globally, though, they're holding above the absolute breakout level. This is the ACWI, the iShares MSCI ACWI ex-US ETF. I like to pay attention to what's going on globally, right, as a sign of broad-based equity strength around the globe. To me, it's a little bit of a breadth indicator as well. What we see here for the ACWI ex-US is that we are above the 50 and 200-day moving averages after a breakout, and we continue to hold above those breakout levels. Momentum has shifted into bullish ranges. Now, we've pulled back from an overbought condition, but we are still holding in bullish ranges. At the same time, however, we remain in a downtrend on a relative basis. Now, we've broken the downtrend line in the near term, but still starting to head lower. I'd love to start to see global stocks put in a little bit of better relative strength against the U.S. market. So this is against the S&P 500 as a sign that equities around the globe are starting to pick up. For a long time, it's been the U.S. market driving trading. But, for all intents and purposes, we're starting to see some good trends in global markets. Finally, I talked about the brokers and exchanges. We see a breakout in IAI above the 200-day moving average. Bullish ETF power gauge ETF rating. 13 bulls for 1 bear. Momentum confirmation as the fund is overbought. And we are starting to see a relative uptick against the S&P 500. Hasn't broken out of the consolidation yet, but we are watching it closely, and I'm highlighting it in my note today. That's going to wrap it up. I hope everybody has a great Thursday. I will talk to you tomorrow.